the ForexAnalytix setup here. What I've been talking to y'all about that as I become a lot more, I would say not comfortable, but used to how this setups. We talked about this yesterday. We saw the Canadian dollar was a big mover as this thing just dropped like a rock. So we posted this analysis in Asia. Market retreated into the U.S. close, challenging the trendline breakout, 30-60 confluence with the 30-57 to 50%. And we'll take a look at that quickly. Bulls on the defensive, therefore rallies to be sold between 31.10 to 31.25. After today's fast slide, bulls will need a 2-hour close to above 31.75 to regain control. There's already the chart here that we have on the 2-hour, and we're actually going to go on and move on to that quickly. And obviously, as I said, the big mover has been here, and look, we're still under intense pressure here. One of the guys in the chat room this morning, in Asia, actually had bought the dollar CAD. He was up 30 pips. And he's like, and he was right in here, and he was talking to me and Joe, and he had said, "Wow, I wonder if I should just get out of it." And my thinking was, yeah, because I was telling him, I go, it's going to be on the defensive. Usually, you don't see a market fall out of bed and then turn around and shoot right back up. So I was telling him, I go, it's going to be on the defensive. So I posted some of the analysis there, and so he quickly jumped out and was able to get out for 30 pips. So he must have got in around 30.46. So good on him, because we slid it, and he would have given up most of those gains. But here's the dollar CAD right here. Suddenly we saw it just fall out of bed in late U.S. trading. But if you take a look here, we've come right back down to this trend line, the trend line breakout that we had talked about. And that's where we're finding support right now. But any rallies back will certainly be challenged here. So we'll go over the analysis. What we're going to do is, like I said, we're still going to be finding our sea legs here for the first week or two to find out what's works for us. We do want to go on and cover a little bit of the news, find out what happened. And then at that point, then we can go on and jump right into the analysis. So let's find out what happened here with this dollar CAD. Dollar CAD strengthens on NAFTA trade deal optimism. The Canadian dollar edged higher against its U.S. counterpart on Tuesday as oil prices jumped and investors grew more optimistic. Canadian Foreign Minister Chrystia Freeland returned to Washington for talks aimed at rescuing NAFTA. I think there's a fair bit of optimism on NAFTA, said Greg Anderson, global head of Forex with BMO. And we're going to just fly through this, so we don't want to spend too much time. So I kind of like hit the little highlights here. Canada sends about 75% of its exports to the U.S., including autos and oil, and so its economy could be hurt if a deal is not reached. Also, modest gains for the loonie came as stocks on Wall Street were able to shake off concerns in domestic data. Housing starts decline to a seasonally adjusted annualized rate of 209,986. So we certainly saw a pretty good impact here when this dollar CAD just really slid. And if you take a look at it, we had actually come back up here to this 32 cents here, or 132. But look, you gave it a pretty good couple of tries here. We had the support. And just right before the close of session, boy, we really break off we did, but we came to this support of the trend line breakout, which is right where we started finding support, confluencing with the 50% of this range here from 28.88 all the way up to 32.27. But we'll go on and quickly take a look at the Aussie dollar. Aussie and New Zealand dollars stay near 2.5-year lows as the trade war intensifies. The Australian dollar slipped to 70.99 on Tuesday as it touched 70.85, a level not seen since February the 16th. China told the WTO, World Trade Organization, it wanted to impose $7 billion a year on sanctions in the United States in retaliation for Washington's non-compliance with the ruling of dispute of U.S. dumping duties. Separately, Trump told reporters on Tuesday the United States was taking a tough stance with China. Well, one of the things we talked about is, and we try to encompass all factors. We know we're coming into, in the States, we're going to be coming into midterm elections. And to be quite honest, there's not a reason for the Trump administration to it would appear certainly, to be too cooperative as far as the negotiations. Obviously, their take is, hey, let's just play it tough all the way. So my point is it doesn't look like this is going to alleviate itself anytime soon. You know, the Chinese delegation came about 3 weeks ago. They thought that there might be a little something there. It was a low-level delegation, but certainly nothing. And then last week, Trump, Friday we got that strong close on the dollar when it looked like it really wasn't going anywhere, although we got a very good jobs number. And then said, you know what, I might just slap another 276 billion. That's not the kind of type of talk or headlines that you're thinking if something's going to be resolved anytime soon. So certainly the Aussie has been whacked by that. And since further weighed down by domestic data that showed the weakest consumer sentiment reading since November. But it went on to say, if sustained, this will be a drag on consumer spending and supports the case that households won't be comfortable continuing to run down their savings rate. Soft readings on the consumer business confidence are consistent with our view that the RBA will be on hold for a long time yet. So let's go and move on to cable. We know that that's been just jumping it up and down like a yo-yo. Oh, here I did it again. I went and jumped on here to the, see if we can jump and get this thing back before it jumps in there. Doesn't? Well, we're going in, oh, great, we got lucky there. Sterling bounced from early lows and volatile trading before a central bank meeting on Thursday. We have the ECB too, so I don't expect any big movements today. So we're going to kind of focus on our levels spread out a little bit. But anyway, it says it did edge off the lows today broadly on the day at 30.18 in mid-morning trades. It's clear the stories about an imminent change to Theresa May are still weighing on the sentiment, and the panel will find it hard to rally before clarity on Brexit emerges. The rebellious conservative lawmakers have condemned May's plans for Britain to remain in a free trade zone with the EU. The pound has lurched up and down almost every Brexit-related headline the past week as traders struggle to decipher whether Britain can avoid a no-deal Brexit when it leaves the EU. Traders and analysts and so many investors are reluctant to take out big directional bets on sterling because of the uncertainty about where the Brexit negotiations are based. And certainly, like I said, you're just seeing this moving at the whims of these headlines. But let's go and finish up here with the dollar. We talked about the dollar, and I set out this analysis too in Asia. And my point was, we talked about the significance of 95.32. Remember, on a 2-hour close below, and every time it comes to 95.32, it wilts like the last rose of summer. But then before we get to 95, we barely take out 95, it jumps right back up, all perked up. So right now, we're just getting tighter and tighter in a very tight range. So we'll get to the dollar index, but let's go on and take a look here. The dollar consolidated its gains on Wednesday as markets remain cautious about trade talks between the U.S. and Canada. The dollar rose nearly 1% in the past 2 weeks. Emerging market sell-off seems to be broadening, and monetary financial conditions have tightened. One of the things also here, folks, is this same news, I do go on and post it here in the ForexAnalytix chat room. There's a chat room there, and I'm usually up most of this news. I was actually up pretty early this morning, not that early, but I'm saying is I'll go in and post that news, and you can see all the traders in there: Martin, Simon, Olivier, Richie, Amanda, Blake, Stelios. But usually I'll go in and post that news early on. It was actually probably about, at this point, probably about an hour and a half when I was posting that news, just kind of get that flavor for the day here. We'll go on and fast forward this down here. So everybody on the Jumbotron here at ForexAnalytix. Blake mentioned talking about the euro, but we'll go on and jump in over here with the cash dollar index. So put on here for, this was in Asia last evening, the dollar index 2R unable to take out the 95.32 on the 2-hour close and unable to break the 95 on the 2-hour close also. Parallel trend line should provide a failed target area for buy stops. I still believe an upside buy stop pop is in the weeds. And that's my concern here on the cash dollar index, because bulls still continue to remain in control. We talked about this earlier in the week, how this 95.50, it just keeps, traders just keep selling against that. And that's fine. It has worked. But like I said, we just seem to keep holding and holding here. We'll see how the ECB will play out tomorrow. Personally, I don't think we're going to move anywhere until tomorrow, until we get past ECB. But generally, what I've found over the past few years or whatever is that generally when you get the ECB and it's in a key area, usually we see the euro drop and then turn around and recover smartly. We're just, like I keep saying, thinking to myself, we're just one headline away from breaking higher. I don't think they're going to launch a whole brand new leg, but I could see these stops taken out and then us run out of gas somewhere up in here. And then also we start sliding back down. But we will see how that all plays out. So let's go on and move into the bias chart. Let's go on and move this out of the way. But like I said, I always like to point out everything you've got here available here on ForexAnalytix, including a news service here, real-time news service. So you're able to stay on top of these headlines. Let's move this out of the way. So here's what we're going to do is let's go and get set up. Now, most of the time, our trading or our analysis is focused on very, very short-term support resistance. We were there yesterday at 1583. We once again reinforced the importance of this 1541, and I'm talking about the euro. And every time it looks like it's going to break a little bit higher, it pulls back in. So a little bit lower, they end up holding it. And yesterday you saw the importance of this 1583. You see that? And I was saying, be careful you get past it because they're going to try and push this thing, towards that 1541-ish area. So you got to be a little bit careful with this market. As we go into ECB, it's going to be interesting. What I've seen in the past is we end up being on the defensive, and I'll be doggone if the euro doesn't come back. Obviously, you're seeing here, it looks like a little bit of a trend line coming here. Things are just getting tight, very tight. And it's going to, in some ways, the market ends up spinning the way that it wants to do. My thinking is, and I've been saying that, is that to me, when I look at this, structurally speaking, not just technically, but we'd be looking at the technicals, structurally, when you give this a little bit more room back, you look at it and you go, it just feels, and right here, it just feels tired, like as if it needs to take a rest, come back down here, regroup, and then see what's cooking going forward. That may play in, and that's why I keep saying that may play in with a little upside stop run here in the dollar index. I mean, if you're a bear, you got to be thinking, man, this thing just doesn't want to break. I mean, it's not going higher, but it just doesn't want to break. It just seems to have this good undertone bid. And that's my thinking here with the euro. It just feels like it's susceptible for a downside break. You can almost just feel it. And when I say feel it, is that you just don't see those bids coming in, or it's quick to find the offers as we make a run up here. And anyone I would think, if I was long here, I'd be thinking, man, I just can't get a lift here. They're probably going to stop me out. I mean, should I just jump out now? Well, this 1583 is key, but to me, it just feels like I don't see where there would be the impetus to come in and buy it right now. That's my point, unless we got some, headline coming across. So that being said, where are we going to go in and find support? Well, if we go in and break here, we're going to goose the stops here. We talked about the significance of the 1541 on the daily. To me, we're looking at this 1504. I don't know if it'll go all the way down there. It may. I'm going to go with this 1504 going into the ECB. To me, it feels like this market just feels heavy, like it just wants to, not like it wants to like break, just that it just wants to, feels like it just wants to just roll over and just goose some more stops. Probably scare the market when we take out 1541 because we know how important that is on a daily. And we may come down here into this area, this 1504, challenge it, and it wouldn't be surprised if we did that and the euro just starts turning around and starts advancing. And that might play into where we get with the stops on the dollar. So going into, although it's a ways off, I really don't see anything changing unless we get a headline. We're actually going to go with 1504 on the euro ahead of the ECB. Resistance, well, we're looking on here on this 2-hour chart. and we're trading in a very, very tight range. Well, you can see the resistance right here on this little bar. And I like to go with the closes because that's where you go in and see the importance of when a market's closing, whether it's at the top of the hour, the top of the 2 hour or 4 hour. And you can see here, right there, and my thinking is, those who've seen my analysis, I never like to put the support at the low hit or the high hit, because how many people actually bought the low and how many people sold the high? My point being is you want to go where there's the most volume. So when you look across here, look how much trading was going in the middle here. You see here, back and forth, a lot of volume, and that's where the markets get. You're going to find where there's that most activity, or where people's opinions can be swayed if we push beyond here. So what I'm looking at is actually right there, that close, and that's going to be 1625.5. Let's call it 1626. And that's where we were yesterday, 1626. And you can see these little runs up here. We just couldn't go anywhere with that. Okay, so, and you can see how tight we're trading here on this 2 hour. But as I mentioned before, it just feels like as if this market wants to take a rest and come down here, find some new support, maybe some new demand. So if we come down here and we gun these stops and we're not finding any more further downside, then the market would try and work up a little bit higher. If we could reclaim 1541, if this plays out this scenario, then you might continue to see more buying. And then if the dollar hits some stops, if it's going in the other direction, maybe we get a little bit of momentum. But for right now, we are just plain old stuck. You can see it clear as a bell in this range. I said this yesterday, or I was telling the guys in the ForexAnalytix chat room, it's like, it feels like we're in the middle of a range that's in the middle of another range. You see, my dad used to say, get my drift? Right here, here's the range, so we're going back and forth, and then we're in the middle of this range. So we're just kind of sitting here, and I said that yesterday, we're just treading water for right now. So if you're going to jump in and do anything, we talked about 1583 yesterday. I said, hey, look, if it gets beyond that, be very, very careful. I go, because this market may garner that momentum. We end up holding here, and we went up a little bit higher, about 1612-ish. And then we just slid back down, and just saying that's how this market's playing out. But like I said, let's go and move into the cable. There's not a lot of action here, so we're trying to focus a little bit on how this market's playing out. Let's go back with the cable. We talked about this yesterday. This came right into our area. I was looking for 3083 to a stretch here, and once again, going with the volume here. And I thought we might have got a little bit even more juice. There's that 3115. You see here, all this volume, a lot of volume. I thought maybe if the market gets a little silly, it can push right up into that 3115. Well, it made it up to 30. This is our level, 3083 to 3115 on the stretch. Well, it made it to 3088, and then the wheels fell off the caboose as we slid below this. Now, here's the important level. We talked about that. It's 3056. The reason I go in and post the levels here on the chart, because to me at least, it helps me reinforce when a market gets a little bit nutty or we start to take off. We saw some great advances in the cable on those Barnier comments. So then as soon as you look at the chart, it's got marked, oh yeah, there's that pivot, 3056. That's very important. And that was one of the things that we pointed out the day before when we were looking at the analysis, and I posted that and I told y'all in the Asian update. Well, right now with the cable, it's back to being susceptible, and nothing has changed, susceptible to these headlines. So where's the possibility? I think it's just really a potential just for some stops, nothing more than that. But I think we're really going to have to get some great news that actually has traction in order to go on and move beyond here. And so I think this 3056 even plays a greater importance, and I'll tell you why. So we get this rally, and now we're pretty oversold. So we get this rally and get some good news. We get this spike, and people might have bought into it, and then it turns and falls back. We jump right back on some more good news, and we fall right back. Again, some more good news. This time we took out the key area, and so I'm thinking anybody who's been buying, like they bought in here, they bought in here, they're going, you're not going to fool me anymore, okay? I'm not fooling for these stupid headlines I'm not gonna buy and hang on until I see some real traction. Not these headlines that say everything's nice and sunny. So, and that's my thinking in the sense that if you always, Blake likes to say, you want to put yourself in the other trader's shoes. Think about it if you bought long here and then the market flushed down, and then you go long here and we pull back again. You go long, you're like, you know what? I'm not going to be fooled anymore. I'm just not. So my thinking is the only way we can get past and beyond this, we're going to have to see some good, solid, concrete news. That tells me this really is important here. It's going to have a bit of a tough time. Same things, probably, if we do get that dollar breakout, probably susceptible here to a little bit of a downside break. So I want to give it some room at this point, and it's going to be 29.16. You can see the touches coming across here, and let's pull this back. And just so we don't get caught with our pants down, I really want to give some room here, and you can see the significance of 29.16. A little bit of support, not a whole lot, but once we get past 29.16, solid as a rock. As far as resistance, same thing here, pokes its head above, but we slide right back down. Got above 29.16, we pair back. Once we get beyond 29.16 on the move, it's blue skies ahead, although it didn't last for long. So you can see it's a very important level. So we're going to go with 29.16 here. And we can even throw a fib here on a very short-term basis to see how we stand. If we have any confluence with 29.16. Well, lo and behold, right there is just below, just a hair below the 38%. Now that makes a lot of sense that they would go and shoot for that. So let's go with 29.16 as we get ready for tomorrow. 30.56 still remains very key on a daily. So today we're spreading out our resistance and support levels to take into what could be a move. One way or the other, we're going to get a pretty good little break. Now we're looking for resistance on a very short-term basis. It's right here, right there. You see it coming across this level here. So it's not actually that far above, right there. I'm not going to go with the 30.56. I think that's important, but I think it would have one heck of a time getting beyond that. If it does, it really, as I mentioned in the analysis from a couple days ago, if we get above 30.56 on a closing basis, a daily close, hey, that opens the door for 133. So I think today's resistance, right there, 30.34. You have to get, and that's a 2-hour close above 30.34. So that's going to be our resistance. Although any fades in there, that would be important. But I'm saying is any moves into that, that's where our resistance is going to be, 30.34. Let's go and move into the Aussie. Now this thing's been in a world of hurt. It just can't seem to pick itself up, but it's trying to hold here. Well, here we are again. We mentioned this yesterday. No change on here. It's going to be 70, 50, 71, 71 right here. And we actually kept this line up here, but it would be lower in case we do break. I'm going to remove this. It would be down here at 70, 50. And that's only because my thinking is if we do get a little bit of a dollar stop run, we're going to, I don't want to say wash out. I just think that we'll break beyond here. And that would be the most logical area for them to go to initially, 70, 50. But if we do get that dollar break to the upside, certainly we're going to go and see some pressure. And I don't think anyone would stand in the way here. And once again, the issue with China doesn't seem to be going away anytime soon. So it's going to be 70, 50, and we've got 71, 70. This is where the rubber is going to meet the road here. So this remains the same. Let's go and move into the Kiwi. Same thing here. I just don't really see any changes here. We had here 65, 65, 85. As we move back in here, look, these markets aren't really going anywhere. Here's a 65 right there. Well, for the heck of it, we'll just leave it here. Right there, there's a 65. This market's not going anywhere. It's just trapped in a very, very tight range. That tight range, though, is at the bottom. And you can see here, just no real movement here. Look at that. Just a very tight range. Although, as I mentioned before, I think it's susceptible if we get that little, to me, like I said, the dollar breakout. I think that we can get the dollar to hit some stops. The dollar bulls are still in control. We'll get to that, but I'm going to go with 65 cents here. They may even shoot a little, and that's not even very far, 15 pips. So they may just go in and goose beyond there, maybe dip down to 64.86 if we do get a dollar upside pop. And no resistance until we get up here to the 65.85 here. We have that, yep, 65.85. So let's go to yesterday's big mover of the day. That's the dollar CAD. Now, what kind of damage did we see here? Let's go and move into the daily. Well, there's a breakout that we had here initially. Well, we can look a little bit closer on the 2 hour. And we did talk about how we moved to the 50%, okay? But here's the deal. You see here, C3084 on a daily close, that's huge. That's huge right there. The only way we can start to have the market, I'm going to say, because I think we were talking in the chat room in the Asian session yesterday, and I told you that one of the guys, he had a pretty good little fill. He was already up 30 pips. At the time, the dollar CAD was at 30.76, so still a little bit higher. And he was like, do you think I should go and hang on? And my point was, hey, it's going to be on the defensive for the next couple of days. So any rallies back, they would sell into it. Well, once again, you know how I like to go. To me, it's important with the closes. So on a short-term basis, we'll have to regain 30.84 on a close just to try and get the market to think, okay, maybe we can push a little bit higher. It's still going to be a sell the market type of situation. To me, what I'm looking at 50 back of this candle, okay? To me, and quite often you'll see that. So let's take a look at this candle. Quite often you'll see these markets run out of gas at 50%. And where does it take you at? 3109. Let's just cut, 3109. 50% of this candle right here. So the analysis that we had in the Asian session, the market retreated into the U.S. close, challenging the trendline breakout of 3060, confluencing with 3057, the 50% of 2288, 3227. Bulls on the defensive, therefore rallies to be sold into 3110.25 right there. After today's fast slide, bulls will need a 2 hour close above 3175 to regain control. So here's my take here. 50% back into yesterday's bar right here. This whole trading takes us to 3109. What do we say we're looking at? 3110 to 3125. Makes a lot of sense from a technical standpoint. We've done a lot of damage here on this market, really opening the door for us to move much lower. So let's go now move back into the 2 hour. So my thinking is moves back up in here. You see here, 3110. There's a 3109 right there. There's that 50% of yesterday's bar, yesterday's whole day's range. Okay, and if you look here, there's 3128. I think the market would have a tough time to going back there, but there may be people that were long on the way here at here. and here. And they're saying, look, if I can get back here, any move up here, I'm going to get flat. And there are people that are thinking, hey, look, you know what? If I can get I want to be short, and if I can get a run back up in here to 31.25, oh heck yeah! This thing, it broke support here. Look at this level here. They held them very nicely. A few stabs on both sides, but body closes. They held here. We came back. We're holding our own. Oh yeah, anything around 31.25, I'm a seller. Well, the thinking it may be is we may just run out of gas. Anywhere, as I mentioned, from 31.10 up there, people are going to say, I'm not sticking around. This thing is going to work much slower. And so any moves above 31, and I'm saying 31.10 to 31.25, I think that's where they'll step in and fade it. Anyone, same thing on the way back up. They're just saying, hey, look, if I can just get back up here to 30.90 or anything close to 31, I'm out. And so my take is for the next couple of days, we'll be on the defensive. Rallies back here, they'll fade them, they'll come back until we can build a little bit of momentum. The important close is going to be 30.84 on a close to kind of stop the bleeding on the downside. So we got 30.84. We talked about that before. Okay. Support now is going to come in. And this whole body close, that held pretty well. Actually, when I was doing the analysis for back here, I was looking at 27. It didn't even make it to 27. And when I revised the analysis here, I saw, well, what the heck? Here was a little nice stab and closes right there. And the market almost made it there, missed it by just a couple of pips. So when we're looking for support, if we break lower, we're really going to gun some stops. If we break this trend line, roll back in. If we do that, certainly 29.76 would be a target, but in the meantime, that would be your support. Right, you see coming across here, right there, that would be 30.09. So if we hit those stops, watch out, we'll really break pretty hard. It would be 30.09. $30.84 is key right here. Now, for resistance, well, we already talked about that. We saw the analysis here. Bulls on the defensive, therefore rallies to be sold 31.10 to 31.25. Okay, we'll just put this maybe a couple of ticks above. We'll call it 31.12. So it's going to be 31.12. This market still remains bullish, though. Nothing's changed as far as that, and we're still above that breakout. Let's go and move in here now to the dollar Swiss. Same thing here. We're just trapped in this tight range, and I don't see anything moving, anything changing at this point. So dollar Swiss going to remain the same. No changes. You can see here we've had a little bit of a bounce off this area, but 97.56. We moved it up 2 pips. We actually have 54. Worked out pretty nice. Or 52. There's 97.52, and so it held the market. We paired back. We didn't pair back a whole lot, but 97.09 is the support. No changes there here on the dollar Swissy. Still bearish. Now let's go and move into the dollar yen. This has been a bit of a mixed bag, and lo and behold, where we've come back up to this pivot, and we put our support, our resistance at the pivot. And we mentioned yesterday how important this pivot is. I'm not going to go into the reasons. Well, one of the things that's provided the dollar yen support has been here with the 30-year bonds. Now, most of y'all look at the 10-year notes. I like to look at the 30-year bond. Always have. Not going to change. I looked at the 10-year note. I feel more comfortable with the 30-year bond. And you can see here, we used to always talk about, I used to tell Blake, it's all about the ZBs when we talk about the dollar yen. And certainly lower bond prices means higher yields, and the dollar yen trades inversely to the actual bond futures price, but it trades with the interest rates. Certainly this is supportive, but you have to wonder, and this is my thoughts here with the dollar yen, look at the bonds. I mean, they've really broken. We got past this bias pivot, and we talked about that, the significance of 4407, okay, where the momentum changes. I mean, we have really garnered some good downside momentum going down. And let's take a look here. Actually coming into this support area here, 4127. Looks like they bounced. I mean, they may have missed it by one tick. So the dollar yen has had every advantage when it comes to interest rates, and we still can't even take out the bias pivot. That's what I'm thinking. Is this 1167 is huge. It's important. You know, we might take it out on the stab if we get the dollar to, you know, break higher and hit those stops. But I really don't see a lot beyond that. If we were to get beyond that, I think we'd run out of gas around there, 1194. I really do. But for right now, it's all about 1166. Until we can take that out, nothing changes. Support, 1095. No changes there either. Same thing here is it's all right now about 1095. On a short-term basis, yeah, this 1112, but if the dollar were to start to slip, that 1112 might just bounce for 15, 20 pips, and then we slide on down on our way to 1095. So I don't see any reason to change that whatsoever. So this stays the same. Now, let's go and move into the cash dollar index. Back to one of our more interesting pairs, just like the euro is very interesting, and the cable's been very, very interesting. Well, we've talked about the cash dollar, and we've talked about this 95.32. We mentioned that yesterday, and that actually worked out well. Actually, from the prior Asian session, we showed that analysis here, and it still remains to be this 95.32 right there on that close. I got, well, you can see it right there. See, it made to 31. See, but here's the bar that we had focused on for the last 2 days, and you know I like to go with the closes. Oh, right there. You see that? Right there. 95.32. That's what our analysis has been based on. And guess what? They have not been able to get beyond that on a close. They've actually, the market has faded against 95.32. You see that? When we made that rally, we came off those lows, slid right back down. We've rallied back up. We just can't get, at this point, a 2-hour close above 95.32. And that's been my trigger right there. And I told people, be careful if we get past 95.32. You can go, once again, we're trading very tight ranges. So you can go on and say, you know what, I'm going to just keep playing both sides. And once again, we talked about that in 95.50. Hey, until I'm wrong, I'll just keep doing it over and over again. That's fine then. Just make sure, and I was telling some people in the chat room yesterday, just make sure we don't get a 2-hour close above 95.32. We get a 2-hour close above 95.32, then same, if it was me, I'd be covering, and then you probably start to see this market. Now, if it gets a 2-hour close above 95.32, now we're moving to the challenge up in here. And that doesn't sound a whole lot higher, but here's the problem, folks. You get that close above 95.32, boom, third time's a charm in all likelihood, and we just gunned those stops. Once again, I'll say the same thing again. I don't think the dollar's going to take off the whole brand new leg because I just don't see the catalyst for that. And if they're on everything, all the positive comments and things that you can, and we're still languishing down here, but bulls still remain in control. To me, I'll keep saying it. I think we're just one headline away from blowing these stops. Where we run out of gas, well, what I did was I just took took this trend line here that I put on a short-term basis because I could just see it. I'm thinking, whoa, you know what I mean? It just keeps matching and matching and matching. Actually, to the point here that, look, it's even holding here. I just did a parallel trend line, moved it up here, and you can see where they ran out of gas. Now, sometimes with the trend line, it is a good idea in this particular situation to move it to the very high tip there. You see that? To me, it'll be important where on a 2-hour close where it closes But yeah, right now, it looks like we could scoot on up to 96.10. My thinking is if we get past this area, nobody's going to get in the way. Nobody. And then there's going to be people who say that we're bullish and have been bullish, and they're just going to add on. So my take is you can still make a pretty good run up here. I don't think we'll fly too far above 96, because I think what would happen is we would just run out of bids, and then the market would just kind of hang around, and then we'd be susceptible to a slide back. But that being said, and I guess we'll leave it there on the tip here. But close obviously be important if we got that stop and then we start sliding below 96. But to me, for right now, it's holding, and they've got the sway as far as the amount of positions, as long as they're being held here. So at this point, you can say it's oversold, but look at it from a long term. You know why people are bullish. So, and there's a case to be made. We've seen that here. Maybe we got a little head and shoulders, maybe not. Sometimes that ends up being like a continuation pattern. And as I mentioned, everything from a little bit medium-term perspective points to the dollar still being bullish. One of the reasons probably why it won't break. And on top of that, the headlines or tweets or whatever that we get, and I don't think this trade war business is going away anytime soon. So I think that just like we've been trading these little stops and areas, I just think that the range may expand a little bit more, where we'll gun these stops and maybe we start trading in here, 96.20 down to possibly as low as 95.60 or 95.50, then back here until eventually we can get this to break. But I think it is susceptible to moving higher. So once again, be wary of 95.32 on a 2-hour close. You don't want your resistance to be that close, but my concern is, like I said, if we get beyond this 95.32, we're going to blow some doors. If we do, I guess we're going to go move that in alliance the same way with the euro. Let's take a look here. Really, I just don't want it to be that far up, but I think we're susceptible for some stops. I just don't have a good take. I think that we can blow stops. How far this thing will go, it's an awful long ways away. We'll just go with these closes right here, which is going to be 95.67. 95.67. Let's go with that. But you got to watch this 95.30, 95.32. But let's go and put that here for 95.67. Watch the 2-hour close at 32. As far as support, right here, 94.88. No changes here. 94.88. It's holding here like a champ. And they keep buying it every time it dips just below 95. But I think we're stuck in the mud until tomorrow. We're trading very, very quiet here. Look at the euro. And then so you would think this was 15-minute bars. These are, look at this. These are 2-hour bars. Look at that. We're just stuck in the mud. I don't think we're going to go anywhere unless we get some crazy headline, and we know that's a possibility, until tomorrow, post-ECB. Let's go on and now move into the gold market. Well, we talked about yesterday, let's move this out of the way. Yesterday we talked about the significance of 1194. 1194 was intraday support. 1194, we put asterisks on it. It means that daily, that's key for the daily. And our resistance was 1204. So we saw the market stab down here. Remember, our intraday support was 1194. Our key daily support was 1194. So we're looking at the 2 hour. So like I said, I like to look at how the market played this thing out. So we broke, and when we held that 92 area, we rallied up here to 95, we slid back down, we tested it here, and the market was showing, hey, it's holding, and that's more important than the daily support, which is coming in at 94. That was key daily support. Well, we got the market launching up, and really on the technical basis, boy, did we get clipping along here. Well, we rejected here on a very short-term basis on the 50%, but we reassert ourselves as the dollar CAD started really taking off and really got this thing pushing higher. We got just above this 1205. We know 1204 was our intraday resistance because it goes from the day of 24 hours, and the 1207 was huge. Well, we since faded again, and we're right back here, and now we're starting to slide. It was important that it held 1194. A little bit of worrisome that it's already starting to slide back. Well, just going with the flat out technicals, there's going to be support there, 97. For right now, no changes. We've got this on a 15-minute. Let's go and put this back here for the 2 hour. And I think I've got like about, about 4 years of intraday data. So it takes a couple of minutes to go and load it up when you're changing it. But you can see, the reason I put that here, because you can see the significance of 97 here. How that has held the market. On an intraday basis, for right now, unless it breaks it, it's going to be 1197. But once again, if you see this dollar close above 95.32 on a 2 hour close, get out of the way. So it's going to be 1197. And remember, it's key that they hold 1194 on a daily. If we lose a daily at 1194, at this point, the way the market's acting, it's easy for this market to slide down to 1181. If we lose this, that doesn't sound like a whole lot, but I mean, that's where the test would then come in. You see it come in right there. There's your 1181 right there. So we lose 94 on a daily. It really opens the door. Now, before we actually made that run yesterday and we were holding up, yeah, if we lost 94, we talked about this. We signed support at 85. Well, we've already tested 94 and rebounded nicely. So if it breaks 94, yeah, that really opens the door for a test of 81 here. Technically speaking, we'll have to see what happens. Resistance on the upside now, still going to be the same 1204 with 1207. No changes here. And you can see it's just very, very tight trading. How the markets just react. Just very tight trading. Actually, this was based on a 15-minute here chart, but it's just the markets just reacted. Just, once again, you get a break here. See here, you can imagine a trend line coming in right in here and get a break, and you get a quick little shot. So the market is trading on very, very short trading. We'll throw it into a 30. Before we move in to the bonds and the bunds. We're almost out of time, but I'm going to spend a little bit of extra time. As I said, we've got ECB action tomorrow, and like I said, we're still finding our rhythm here on the European crossover. But you can see here, and then you get a break. So these markets, you can see how technical the gold market's trading. Technical, they're just keeping it simple. And I tell you what, when you're trading gold, they love to trade the fibs. This market reacts very, very well to the fibs. I think there's also been some talk about Blake doing another Fibonacci webinar. I'll tell you what, fantastic stuff. It really is. He did in the past did a very, very good job on explaining Fibonacci. Let's go and move in now to the bonds. Well, this is one of the reasons why the dollar yen continues to stay strong, but I tell you what, it should be a heck of a lot higher when you look at where the 30-year bonds are, i.e. rates. We're well below this bias pivot, but we have come into some support here. That support level of 41.27. So we're going to use that for today's bias chart support. Resistance is just going to be right there. Just go with the technicals on the level. 43.03. It's a ways away. You know, if you're looking at it on a very short-term basis, and we could do that, it actually comes in right there, 42.28. But, and I tell you what, it's 20 pips higher, 20 ticks higher. We'll go with that. But I tell you what they could do is they can come up here, rotate a little bit lower, find support at 42.14 and launch, and then that would be the next key level. So let's just go with that. We'll go to 42 right there, 42.26 at this point. We'll keep it on a very tight leash. Obviously very bearish. And let's take a look here with the buns. Had a nice little rally here. I actually picked them up yesterday, 59.27. I spun out of them fairly quick, but there's our bias chart support from 59.27. We actually were looking at, remember we were looking at it, I think it's a 2-hour, either a 4-hour chart. That's where we came up with the 59.27. And this ended up being the bottom here. We've worked, you know, somewhat higher here. Let's move this back. We just run out of gas up here at 38%. We're going to move this just a hair higher right there. You see this body close there? 59.74. Support now. Right here. You see this bar on this little round here? That's going to be support, and that's going to come in at 59.57. 59.57 right there. And take a look at the DAX. Boy, has this thing been under an immense amount of pressure here. We're actually looking at a 30-minute on the DAX. Support comes in right there. You see that, and that confluence is right here with that little body here. 11.947. Resistance, I'm really skeptical to put it that high. You see this little body area here with these little touches right there. Actually, it's just above the highs. 12,052. 12,052. And that covers the bias chart. And should be time for Dale if he's in today.
He's not here, Paulie. Can you hear me? Paulie, can you guys hear me?
And I can hear you, Blake.
Yeah, I don't think
the volume up. because I have the mic on, so I don't know if it'll if it's going to cause an issue with the
It is.
when Dale comes in, or if he's still out, if it's going to be Blake. But
Paul.
if not, I mean, I don't hear any volume, guys. So if I don't respond, then just send me Blake's typing. Oh, Blake. Oh, sure enough, Blake says you can't hear me. Yeah, I guess I can't hear Blake. So when I'm hooking up this mic, it's not allowing me. Let me see if I can switch my audio, and that might help. Hang on real quick. Let's see if I can switch the audio.
Test, test.
Oh, okay. Hang on. I think I got it now.
Testing.
Now, Blake?
Test.
Oh, if I hear Blake now.
Can you hear me? Test.
Hang on. Let's see.
I can hear you.
Yeah, I know you guys can. It's more Paul. I can hear
You
you.
hear me, but I don't hear. I mean, me myself, I don't hear. I would probably have to read the thing over for
Test.
Hopefully, it'll pick up the next time. But he said Blake's here, so I'll let Blake take over the screen. I can't hear Blake. I know y'all can hear Blake, but I tried that new Yeti, and I think I would have to reboot over. You should work with Steve to fix the audio. Yeah, it's set for Blake sending me. It's set for. Okay, it looks like Blake already took over. Hopefully tomorrow it'll come up fine. We'll find out. But I'll let Blake go in and take over. And guys, thanks a lot for being here for the European crossover.